Hello, and welcome to myfinanceteacher.org. Today, again, I want to have a look at a fundamental valuation of a couple of gold miners. Quite a while ago, one of the members at myfinanceteacher.org asked me to have a look at Equinox, EQX. And although this fundamental valuation of Equinox is coming quite late, I guess it's better late than never. And I'm pairing this EQX with another relatively similar in size miner, which is Pretium Resources, or PVG. So let's jump into the valuations. So first of all, this is a fundamental valuation rather than a technical analysis. And usually fundamental valuation works in the longer term, while the market price for every particular day, week, or sometimes even a month can differ quite substantially from this fundamental valuation. And even within this fundamental valuation, I don't actually include all the possible factors that can affect the value of these miners. In particular, I only look at gold price, the amount of reserves that the miners have in the ground, the costs of extracting those reserves out of the ground, the long-term debts, taxes, number of shares outstanding. We'll look at the time value of money by discounting the value of the reserves over the mine life. And I do have some secret sauce on insider shares, as top management holding the company shares is actually a positive sign. However, there is a range of other fundamental factors that I might not actually be looking at. So take this valuation with a grain of salt. First, jumping into the gold price. I'm going to have three scenarios for the gold price. Starting with the conservative scenario where we plug in the gold price of only $1,600 per ounce and a silver price of only $22 per ounce. As this is a fundamental valuation, we're looking at a price that generally persists for quite a while, say 1 or 2 years. So whether it's likely that the gold price will be somewhere in range around 1600, that's pretty questionable. Our balanced valuation includes the gold price of 1,800 per ounce and $26 per ounce for silver. Again, in the long term, is gold going to fluctuate around 1800? I'm not really sure. To be honest, I do think there is a good chance for gold price to go above $2,000 over the next, say, couple of years. Whether that's due to trillions and trillions and trillions of dollars being printed, or whether that's due to the fact that gold is in a bull market, you tell me in the comments below. But in our optimistic valuation, still, we're not going overly optimistic. We're plugging a gold price of $2,000 and a silver price of only $30. And as one of the viewers on YouTube recently requested, we're also going to throw in a bonus valuation here with a relatively high gold price. We'll come to that at the end, so stay tuned for that. Next, moving on to the reserves and resources in the ground. Pretium has proven and probable reserves of 3.8 million ounces of gold and measured and indicated resources of 7.2 million ounces of gold. PVG also has silver. Proven and probable reserves of silver are equal to 29.5 million ounces, and measured and indicated resources of silver are equal to 48.8 million ounces. All of these measured and indicated resources here are exclusive of P&P reserves. So these M&I are in addition to what the company has in P&P reserves. For Equinox, the company only reports the resources and reserves of gold. P&P reserves are equal to 16 million ounces, and M&I resources are equal to 13.3 million ounces. Beyond these, both companies also have inferred resources, which are a little bit more uncertain than M&I resources. And I don't actually include those in the valuation. So this valuation does seem to err on the cautious side, because as you'll see later on, even for M&I resources, I only include half of those in the valuation. And one more thing to mention here is that the resources and reserves have at last been reported at the end of 2020, and the numbers I plug in here are adjusted for production in Q2 of 2021. So again, P&P numbers here are a little bit smaller than reported by the companies. Moving on to all-in sustaining costs, long-term debts, and taxes, PVG has all-in sustaining costs of $1,175. This is actually the midpoint of their 2021 guidance. Pretium also has long-term debts of $196 million, and I assume a tax rate of 20% for all of these minor valuations, just to keep things simple a little bit. Sometimes in reality the miners do pay a higher tax, but I'm trying to err cautious in other areas such as M&I resources, for example, so I just want to stick to a simple approach in relation to taxes. Equinox has a relatively low all-in sustaining costs in terms of their guidance for 2021. This number in their guidance is somewhere around 1280. But in Q1 their all-in sustaining costs are quite high. So again, in order to be relatively cautious, instead of using the numbers from the guidance, I'm actually going to use a higher cost as in the first quarter of 2021. So if this number reduces over the next half a year, 1 year, then the Equinox valuation becomes actually even more attractive. The company also has long-term debts of over $527 million. Next, moving on to the time value of money, I'm going to plug in the discount rate of 5%. Whether it's not enough for this level of risk, you let me know in the comments below. The proven and probable reserves can stretch to a mine life of 13 years for pretium at the ongoing annual production. If we add only half of M&I resources, then these reserves and resources together can stretch for around 25 years at ongoing annual production. So again, if this production increases over the next few years, shortening the mine life, the discounted value actually improves. And for Equinox, the life of reserves is 25 years, and adding half of M&I resources stretches that mine life to around 36 years. So these high numbers actually show that the annual production right now is relatively low, and actually Equinox does expect a substantial increase in annual production sometime into the end of 2022. So that can be quite profitable if, say, LBMA doesn't just kill the gold market by then. And before we jump into the valuation, let's have a look at some factors that aren't actually included in the calculation. So I want to bring them to your attention. Firstly, the cash balance for both companies is relatively comfortable, so the risks of running out of money is not extremely high. And in addition to the ongoing valuation, there is also additional exploration potential for both of the companies. Now, particularly for Equinox, as I mentioned, if they manage to reach the low all-in sustaining costs as in their guidance for 2021, that will again further improve the valuation. And among the upcoming drivers, Equinox expects the first gold pour at Santa Luz project in Brazil in the first quarter of, that's actually 2022. So let me fix that. There it is. By early next year, they expect the first gold pour at Santa Luz, and that actually can support their share price into next year. Additionally, by the end of this year, sometime in the second half of this year, they expect a pre-feasibility study at Arizona project, which is also in Brazil. And that also might actually help to support the share prices or even push them higher. So now let's jump into the valuation, starting with the conservative valuation, where again, we only plug in the gold price of $1,622 for silver, and we only look at P&P reserves, as if the company doesn't have any of the M&I resources, never mind inferred resources. So we are really quite conservative here. And this shows you the levels of risk if gold price just drops from here and stays around 1600 for quite a while. In that case, the fundamental valuation for PVG would only be under $5, which is around 47% overvaluation versus the ongoing market price. So the risks are quite substantial if gold price is killed over the next couple of years. And the valuation for Equinox is at just over $2, which is a 69% overvaluation versus the ongoing market price. So again, that's the sort of losses we might expect if gold price just drops out of bed here. But is it very likely? Again, you let me know in the comments below. Let's move on to the balanced valuation, where we plug in the gold price of $1,800 per ounce and a silver price of $26 per ounce. But still, we're only looking at proven and probable reserves without taking into account any of measured and indicated never mind inferred resources. That gives you a valuation of $7.50 for PVG, which is still 20% below the market price. So if the gold price kind of stagnates from here, then PVG is not probably expected to jump anytime soon. And the valuation for Equinox would be also just over $7, which is close enough to the ongoing market price, with the valuation being only about 5% higher than the market price. And again, that is with relatively high Q1 all-in sustaining costs. And most excitingly, let's move on to the optimistic valuation, where we plug in the gold price of $2,000 and the silver price of only $30. Silver is actually not far from 30 already. Here we look at proven and probable reserves in the ground, and we only add half of measured and indicated resources, which gives you a PVG valuation of over $15 with an undervaluation of 67% versus the market price. So of course, if gold goes back up to 2000, PVG should do pretty well. And the valuation of Equinox is even better at over $14.50, which is over 100% undervaluation. So that's more than double from the market price if gold goes back to $2,000 and stays there. So this is where we usually finish with our valuation videos. But let's throw in some hopium as requested by one of the YouTube viewers. And in this case, I'm going to throw in the gold price of $2,500 and a silver price of a modest $40 per ounce. And we still look at proven and probable reserves with only half of measured and indicated resources, which gives you a PVG valuation of over $25, which is over 170% gains from the ongoing market price. So that's more than double from here. And the valuation for Equinox is over $29, which is a nearly quadruple from the ongoing market price. So with these exciting numbers, let me ask you this question. Do you think this hopium of doubling and quadrupling is likely or not, say, over the next 1 or 2 years? Let me know in the comments below. While you're there, remember to hit that like button and share this video with some of your friends. I would really appreciate that. And for now, let me wish you a productive Monday and good luck in your trades.